All right, let's dive right in. Today, we're dissecting the high-stakes trading action from March 17th, 2026. This was a day defined by some really sharp moves and, honestly, some pretty critical decisions. We're going to pull apart the end-of-day scorecard to see what was really going on under the hood. So first, let's set the stage. You have to understand, the macro environment was, well, it was hostile. We had these growing fears of war, and a huge rate decision from the Federal Reserve was looming just the next day. This was absolutely not a day for casual moves. The entire market was on high alert, which put every single decision under a microscope. And get this, the S&P 500 closed at 6,532. Now what that really means is, it's the lowest the market has closed since last November. This wasn't just some minor dip, you know? It was a really clear signal of some serious risk-off sentiment just washing over Wall Street. And it wasn't just one thing, right? You had this trifecta of pressure building. The VIX, that's the market's fear gauge, was spiking, getting close to 25, mostly because of all the rising war chatter. And then, to top it all off, pretty much everyone was holding their breath for the Fed's big rate decision meeting tomorrow. And that brings us to the real question on a day like this, doesn't it? In an environment this chaotic, this treacherous, having a disciplined process is everything. So, let's do it. Let's dissect the end-of-day scorecard and see exactly how that discipline held up under some pretty extreme pressure. First up, let's talk about the best trade of the day. This was a textbook example in Palantir, ticker PLTR. And it just goes to show how having a clear, predefined plan can lead to clean results, even when the rest of the market is basically falling apart. So here's how this played out, broken down into 4 clean steps. It all starts with a super disciplined entry on a pre-market pullback. Then, boom, a news catalyst hits, a positive signal from a competitor. The stock moves exactly as planned, surging right into that first target. And finally, the most crucial part, the action, trimming half the position to lock in the gain. It's just a perfect example of emotionless, process-driven execution. And this quote, which we pulled directly from the scorecard itself, it just says it all. The win wasn't a lucky guess. It was the direct result of a solid process, all the way from identifying the entry to capturing that target. Simple as that. But here's the thing. Real discipline isn't just about celebrating your wins. It's about how you manage your losses. And maybe even more importantly, it's about the losing trades you wisely choose not to take in the first place. That brings us to our next section. We're going to start with the day's biggest loser, a stock called NVIS, which got hammered by something called a dilution shock. So before we look at the trade, let's just quickly break down what a convertible offering is. In plain English, the company is creating new shares out of debt. This dilutes the value for everybody else, and you guessed it, almost always sends the stock price down hard. And this slide just brilliantly illustrates the two sides of trading discipline. Look at the left side. You've got NBIS. The stock absolutely plunged 8.2% on that bad news. But, and this is a big but, because a stop loss was set before the trade ever happened, the position was automatically exited, the damage was contained. Now look at the right, NVDA. It hit its entry price but didn't show any strength. So by sticking to the rule of waiting for confirmation, a losing trade was avoided entirely. One controls a loss, the other prevents one. That's discipline in a nutshell. Okay, let's shift gears and fast forward to the most urgent part of the day, the final hour of trading. You've got 2 massive companies, Lululemon and Micron, both set to report earnings right after the bell. This creates a ton of uncertainty and a ton of opportunity. I mean, just look at this timeline. It highlights the rapid-fire sequence of events that traders were staring down. You have a hard deadline at 3:45 to get into the Lululemon trade. Then, just 20 minutes later, the report hits. 25 minutes after that, Micron reports. And, oh yeah, looming over all of it is the Fed's big decision tomorrow afternoon. It's a true high-pressure gauntlet. So how in the world do you trade that kind of volatility? Well, you do it with a predefined plan. For Lululemon, this decision tree laid out the exact if-then actions. No guessing. This is for a straddle, which is an option strategy that profits from a big move in either direction. So if Lulu has a huge miss, you do one thing. If the report's just kinda meh, you do another. The key is the decisions were made before the news ever came out. And it is the exact same story for Micron, which reports at 4:30 p.m. This slide shows that same pre-planned strategy. No guesswork, no panic. The goal is simple. Either you capitalize on a massive post-earnings move, or you cut the trade immediately if it turns out to be a dud. So, what does this all mean in practice? Let's boil the entire day down to the most critical time-sensitive actions and the rules that guided them. This is basically the view from the cockpit at 3:30 p.m. This is a direct look at the priority checklist from the scorecard, and man, it is a flurry of activity. The NBIS position is a critical exit. It should have been closed hours ago. The winning PLTR trade needs to be trimmed. That's urgent. The Lulu earnings trade has to be entered right now, and the Meta position needs to be cut down to manage risk ahead of the Fed. It is all happening at once. And here's the bottom line. When you zoom out, these aren't just some abstract suggestions, right? They are the core rules that were reinforced by the day's market action, and each one is tied directly to a specific trade we just talked about. Respecting the stop saved capital on NBIS. Trimming into strength on PLTR didn't just lock in gains, it gave a huge psychological win on a tough day. And that entry discipline, it prevented a loss on NVDA altogether. And that leaves us with one final thought hanging in the air. Today's scorecard proved the value of having a disciplined process, especially in a volatile, nervous market. It separated the clean wins from the controlled losses. But the big question is, with the Federal Reserve stepping up to the plate tomorrow, will the market reward that same disciplined approach, or is it about to throw a curveball that absolutely nobody sees coming?